Okay, welcome to the part two of the Don't Panic, the Australian Share Market is Fine series. In this video, we are going to talk about the total returns from shares, Australian market versus the USA market, and then we can look at the performance of the Australian share market from these lenses. So if you look at this picture in front of you, you will see that over the very long term, that is from 1900, so it's like 125 years now, that it is actually quite comparable, no matter it's Australian shares or the USA shares. So it's roughly returning about 9% per year compounding annual growth rate. And after inflation is about 6.5% over the 125 years. And you can see, of course, it's always sometimes Australian shares are taking the lead, sometimes the US shares are then catching up and also leading away. But in general, as you can see that over the very long term, that is 125 years, they are almost returning the very same kind of compounding annual growth. And this one is from the Owen Analytics picture I got from, and a similar chart shows same result. If you look at another one, which is from Philo Capital, and this is a bit shorter data from 1900 to 2015 only, and still you can see that despite all the major events, depressions, world wars, recessions, and financial crises, you can see that still the returns are quite comparable. And in the earlier days, as you can see, many years that actually Australia has been leading in the early part of the century, and but in the later part of the century, somehow US has been catching up and is actually leading. And that one was more obvious after 2015. If you look back at here, you can see that actually, yeah, in the past few years, of course, the US shares are now leading us. So the point I'm trying to make here is that do not just look at the Australian share market or the chart alone by itself, but you really have to put this into a very long historical context. So in this case, instead of just looking at, let's say, the daily view and worry about this drop we talked about in part one, that is about 6% drop, or whether it will go down even further in the next few weeks or months, what we can do is jump out of this view, take a step back, and look at what history can tell us. So in this case, what you do is really try to overlay the other indicator, which is the US share market performance. So in this case, we choose the SPX 500, and then use the monthly view, which will give us a much bigger picture. So in this case, if you go back to a relatively recent history, that is, let's say, from the 1987, the share market disaster, use that as a starting point or baseline, you can see that um, prior to that period, we are roughly the same. So here I already used the percentage based, so it's all aligned with percentage rather than the absolute points for each market. So you can see that the during this period, 1987, the Australian market had really been doing quite well. However, as you can see here, after the big drop, the US market, which is the purple line, was able to catch up, surprisingly, right? So this is very interesting. So they sort of took lead and took turns in 1987, and then again in 1994, um, the US was able to catch up. And after 1994, as you can see, there is actually a relatively big diversion here. It's still the same trend in terms of the historical correlation. As you can see, they are still all trending up rather than going to a reversed relationship. But as you can see here, for the US market, especially for the dot-com bubble in the 2000s, uh, you can see that there is a big gap between the US dot-com bubble and the sort of more traditional business-oriented Australian market here, which is not surprising. So that's perhaps why there is a big gap here. So let's follow this and see what then happens next. And somehow, as you can see, However, the US compared to 2000, when you come to 2007, the US it's almost hasn't really gone much in terms of the peak performance from here. Whereas if you look at the Australian market, it was able to rise quite sharply from 2002 to 2007, and therefore Australian market was able to catch up because the US was basically lagging behind and kept at the same level. So this again shows that each country took turns to lead in terms of performance overall. And then after that, both have dropped. So it's roughly the same, dropped a lot because of the 2007-2008 financial crisis. And then, as you can see here, if we use this as a new baseline and see what happens, right? So now, if you look at here, but then, unfortunately, after 2009, the Australian market didn't really do much, as you can see here, as compared to the US market, which has had now a very big rise. So in this case, if you move it to now, so let's focus on the current period if we put it this way, right? So if you see here, if we use the 2009 as a equal starting point, where both markets have dropped, say, around 40%, what has happened is the US has risen a whopping 320%, whereas the Australian market, compared to the 2009 level, has only risen about 47%. Wow, okay. Um, well, okay. Yeah, that's because the 100% is because using the 2006 level, so that explains. But yeah, if you look at here, if you use 2009 as the starting point, you'll see that, yeah, actually the SPX has increased 500%, 5 times basically, and the Australian market has only risen about 100%. So it's only like 2 times as before. So if you follow the logic we shared earlier that each market should um, take turns to lead in terms of the performance, then there is this also historical angle to argue that perhaps the US has already overshot a bit too much, as you can see here, right? Whereas the Australian market is already lagging, as you can see, for whatever reason, right? We don't have to know that. What I'm trying to say is that if you look at the historical performance that was shown in the past 127 years, then clearly you can see that it should be the Australian market's turn because otherwise it will not be able to achieve the performance over the long term. That is 125 years of evidence. Of course, we can all be proven wrong. That means the US market can go even higher. That's also a possibility. However, if you use history as a guide, then that means there is all the reasons to believe that next time should be the Australian market's turn. And when that happens, even if right now we have a small drop as here, as you can see here, right? The Australian market shouldn't drop too much. And if anything, what I think could happen is a bit like the 2007 level, as you can see here, right? For the US to relatively keep the same level as before, and so that the Australian market can do a very big increase like here so that eventually will catch up and then be able to match the longer term performance this way. So yeah, so what would happen? I think this we could repeat this area here, that is for the US maybe to stay this level for the next number of years so that the Australian market can catch up and eventually they can meet around there. So that means there is a lot of room for Australian market to grow, but relatively perhaps a bit smaller room for the US market to grow even higher, simply because by historical standards, it has to revert to the mean, which is the average growth rate, and the US has already took off, as you can see here, that this gap is already very high, so it has to be filled by letting Australian market to catch up. So thank you for this angle, and stay tuned for the part 3.